Welcome to European Tech Talks, a podcast brought to you by the European Champions Alliance. The ECA's mission is simple: support the growth and success of European tech companies in the global market. On this podcast, top tech experts and entrepreneurs from all over Europe will share their insights and actionable tips on how to thrive in the European tech scene and beyond. You'll also get the latest updates on the global tech industry and understand how they impact Europe. Three dynamic European women host your podcast. Andrea, the founder and soul of the ECA, hosting from Paris, France. Lucie, our marketing and communication junkie, hosting from Karlsruhe, Germany. And myself, Anne-Sophie, the tech and product aficionada, hosting from the Silicon Valley. Join us on this journey as we explore the vibrant European tech ecosystem. You can also connect with our thriving community by becoming a member, by following the ECA on LinkedIn, or simply by subscribing to our newsletter on our website. And now, let's jump right into today's episode.
Hi, and welcome to this new episode of the ECA podcast, European Tech Talks. So, there is no day where we do not hear or read news about how far Europe lags behind the US, China, and other important tech ecosystems. In 2022, for example, the investment in tech R&D has been 300 billion euro in the US, 80 billion euros in China, rapidly growing, and only 50 billion euros in Europe. So the question is, what's the problem and what can we do about it? Today, I'm very pleased to discuss this topic with Olivier Coste, a tech entrepreneur who has been researching and writing about this topic for several years. Olivier, welcome to ECA Tech Talks.
Thank you, Andrea. Thank you very much for having me.
So, Olivier, before we dive into this topic of today's episode, could you please present yourself briefly to our audience?
Thank you very much. Yes, I'm a European entrepreneur based in New York and living in New York, having lived in New York for 10 years. I had 4 professional lives. The first one as a civil servant working at the European Commission and then in Paris. A second professional life as an executive in large tech companies, Alcatel-Lucent and Atos. A third professional life as an entrepreneur. I created several companies in Paris and moved to the US in 2014. And then for the last 2 years, I've been investigating what causes the lagging situation of Europe and what we can do about it to bring Europe back to the forefront of innovation.
Thank you very much, Olivier. So let's start with a very basic but very important question for the topic we discussed today. Why is tech so important for Europe?
Well, tech is today like the steam engine in 1800 or electricity and oil in 1900. It's an industrial revolution. When steam engine or oil and internal combustion engines were invented, it transformed the entire economy. From agriculture to the way cities were built, to the way defense was managed, everything was moved. And today with tech, with the information and communication technologies, we are transforming all our traditional industries. A car has been for 120 years an engine on wheels. And in a few years, it will be mostly a computer on wheels. Medication have always been invented, discovered by testing and trial. But in the coming years, they will be designed by AI or by quantum computing. And that will totally change our health and our medication. So all industry will be disrupted by this industrial revolution. The second element why it is so important is that it is key for competitiveness. The European Central Bank has made a report recently that Europe is lagging the US in competitiveness and productivity. And they, since 1995, for the last 30 years. And the main reason they point to is the lack of investment in tech. And the third reason, which explains the title of my book, Europe, Tech and War, an issue of defense. Let me share a slide with you. The wars have always been fought with the last technologies. You see, the first industrial revolution has generated steamboats that led to the hurting of China in the 1840s. The Second World War has been won on tanks, aircraft, and aircraft carriers, which were a result of the Second Industrial Revolution. And today, the war in Ukraine is seeing the impact of precision missiles, which are preventing Russian tanks and Russian aircraft, and which are purely the result of technology. So for all these reasons, the evolution of industries, the competitiveness of continents, and the defense and security of our continent, tech is a critical element for Europe. And today, tech is mostly a debate of supremacy, of competition between China and the US. Both leaders are very explicit on their desire to maintain supremacy or to achieve supremacy for China. And it's a Cold War today on tech, and Europe is totally out of it at this stage.
So this is the next question, and just for our audience, we will put the link of the ECB report and also the slides in the show notes so that you can have a look at them for those who only listen to us. Maybe if you can put the slides in presentation mode, then we have the next one a little bit bigger because there are some numbers. Thank you, Olivier. So what is Europe's situation in tech as compared to other continents? We were talking about the US and China. Tell us a little bit about that.
Yeah, that's a very good question. How do you compare continents in terms of tech? There are three indicators that come to mind. The first one is the leaders. The second one is research and development amounts. And the third one is investment in startups. So let's take them one by one. In terms of leaders, you see on this slide the world leaders in investment in technology. And you see in red the leaders from the US, so Google, Meta, Microsoft, Apple, and so on. You see then in green the Chinese leaders with Huawei, Tencent, Alibaba, Baidu, ZTE. And you see then only later the European ones. There are 4 out of the 25 leaders in the world, which are SAP, Nokia, Ericsson, and ASML. And you see that they are a limited number as compared to the total number of American or Chinese companies, and they are smaller in terms of investment. So that's the first test, the first indicator. The second one is the total amount invested in research and development by companies in each continent. You see that American companies invest every year 300 billion euros in tech, only in tech. In China, it was 0 20 years ago. It is today 80 billions, and it's growing very fast. And in Europe, you see that the figure invested by European companies in tech is around 50 billion. So 1/6 of what the US are investing. This is a worrying indicator. And this is even more worrying if you look at the evolution over the last years. For example, 20 years ago, Germany had companies that were representing 8% of the total world R&D, research and development in tech. This 8% has decreased to 2% in 2019. France was at 6%. It went down to 2% too. You see a significant decline of European players, while the US maintained their supremacy, and China is growing very fast, probably around 25% of the world innovation amounts, R&D amounts today. The third indicator, which is very interesting to look at, is the amount invested by venture capital funds into startups. And you see that Europe, including the UK, so the European Union plus the UK, has about 1/3 of the level of investment of the US. It's about 150 billions every year invested in American startups, and only 50 billions invested in European startups. So we have, again, a significant gap between the US level of investment in startups, in R&D, in leaders, and the European level. And this is worrying.
So I mean, there are today, when we look at the discussion, also the public discussion that we have in Europe, very many different reasons that we can find and that we can discuss about and talk about. This is the case. Why Europe has such a poor position in tech. But you have a special, let's say, way of looking at it. And so, what is the cause that you want to tell us about today about why Europe is has such a poor position in tech?
Yeah, this is a very important question. What are the causes? What can we do to change that? And the causes that are regularly mentioned and analyzed are, as described on this slide, the fragmentation of the European market as compared to the very fluid Chinese and American market, or the lack of entrepreneurial culture in Europe, while Americans come from pioneers and immigrants and have a better culture for entrepreneurship. The third cause that is usually mentioned is the poor level of financing of innovation. We don't have something similar to the NASDAQ in Europe. A fourth reason, which is also mentioned regularly, is the lack of industrial policy for tech as compared to what the Chinese or the US are currently doing. Another reason is the dogmatic competition policy, which prevents large leaders to merge and grow in Europe. And last one, but an important one also, which is often mentioned, is the poor level of public support, especially in the defense industry, where the US are investing way more than European countries. It would take a long time to analyze each of these causes one by one. Let's say that I have my analysis is that these reasons exist, but are less critical, less important than another reason I would like to spend some time on with you, which is the result of both my professional experience in tech and second, the result of the analysis I've carried out over the last 2 years in trying to understand the reasons for this poor situation of Europe. Let me explain what I mean by cost of failure. The cost of failure is critical here. The cost of failure is what happens when you fail on a project or when your business collapses, which happens often in tech. When you are in the US, your business stops or your project has failed, it costs you 2 to 4 months of salaries to lay off people, to stop your activity which has disappeared. In Europe, in every country, it's much more expensive when your project has failed, the market has not materialized, or when your business, which was stable, suddenly collapsed because a new technology has appeared. You have to pay very significant costs, which I call the cost of failure, which are the time of negotiating the social plan, the layoff, the restructuring plan, and then the severance pays. It's a total of 2 years in Italy, in France, in Belgium, in the Netherlands, in Sweden. It's even worse in Germany. It's 2.5 to 3 years of salary that you have to provision and to pay to reduce your activity or to stop your activity when something fails. The impact of this cost of failure, which is specific to Europe, again, it does not exist anywhere else than Europe, is very significant on tech, because in tech, you launch projects all the time. Let's say, for example, you launch a project for 10 million over 3 years, R&D, marketing and sales, a bit of operations, and you succeed. It increases the value of your company by 80 millions. It's great. If you failed in the US, you have lost 10 millions and you stop. In Europe, if you succeed, you have also increased the value of your company by 80 millions. But if you fail and you have to lay off your teams because you're not growing overall, then it costs you the 10 millions you have already invested, plus 17 millions of restructuring costs, which do not exist in the rest of the world. For one project, it's okay. But in tech, you need to launch 5 projects in average for one which succeeds. And that is what is specific to tech. It's very risky because it's new technologies. And then if you make the math over 5 projects of similar nature in Europe, you will have to pay 4 times for 4 failures, 4 restructuring. And that will cost you more than the profit that you will gain for the project, the one project which succeeds. In the US, with the same project, the same 5 projects, with one which succeeds and 4 which fail, you will make money. In Europe, you will lose money. So the combination of the high failure rate of tech and the high cost of failure in Europe makes the investment in tech not reasonable in Europe and has been so for the last 50 years. And that is a major concern. If you cannot make money, you're not going to invest.
So this is really interesting, sharing this with us, Olivier. Why do you put such a emphasis on this cost of failure?
I put an emphasis on it for 2 reasons. The first one is that it seems to me a good explanation of where we are today as a continent. If you look at the leaders of innovation in the US, you will see on this slide in orange the tech companies and in green the companies that have been created around 1900, 120 years ago, like Ford, General Motors, Pfizer, Merck, companies that have been built around the second industrial revolution in green. And you see in yellow the companies that have been created recently over the last 50 years and which are in tech. And you see visually that the US are totally specialized, focused on tech, while the European situation is the opposite. The European situation is primarily a specialization on the industries invented in 1900 and a very poor presence in tech. The leaders in innovation in Europe are Volkswagen, Roche, Daimler, Novartis, BMW, companies created before 1914. And you see very few tech companies, which is the result of the logical profitability of incremental innovation. It works in Europe because there is a limited level of failure. So when industries are mature, you can invest, and we do invest. But when when it is an industrial revolution like tech today, and where you do not know which technologies are going to succeed and which markets are going to appear, you cannot invest at a rate of failure of 80% or more. And this is why we have specialized on the industries of the 20th century, while the US and China, if you look at China, are specializing on the industries on the 21st century. And this is as if in 1900, Europe had specialized on steam engine and the other continents would have specialized on electricity and oil. This would have been a disaster. And this is what's happening today in Europe. We are specialized on industries which are the industries of the 20th century.
Thank you, Olivier. So we always try to, of course, also see the, let's say, the positive things, and to see, okay, now once we have, let's say, stated the problem, what can we do about it? So in your research and also in your opinion, how can startups, companies or large groups grow and innovate despite those hurdles they face in Europe today?
So you're right to ask what European companies can do today. The reforms that are necessary, will come back to then, will take time. In the short term, startups can invent beautifully in Europe. The engineers are great, the infrastructure is great, the legal security is great. So there's everything we need to invest and invent in Europe. My recommendation, and this is what I did, was to focus on the US market. Even if you are German or Dutch or French, and you have friends that could take your products of your startup in your domestic market, it's much better to focus on the US customers because they can invest much more, because they can hire people on new technologies that they will let go if it doesn't work. And European customers cannot. So that's what the Israeli startups or the Taiwanese startups do. They focus on the US market right away. At the moment they invent an idea, they go to US customers and they start there. And then they expand in the rest of the world. And we could, as startups, do exactly what Israeli startups do: focus on the US market and defocus from domestic markets. When you are in a large company, the situation is different. You have usually the capacity to place your R&D in various continents. The way usually companies do, and this is my best recommendation, unfortunately, to my great sadness, is to leave in Europe incremental innovation, an improvement of your existing products on existing markets, and position outside of Europe for the moment until we fix the problem, the innovation on very risky projects that could lead to disruptive innovation, but that is still risky. And you'd better put that outside of Europe for the moment to make money out of it. Again, this is very sad to say so, but this is the result of my experience in both large companies and startup companies. But again, what we need to do collectively is change the system so that we can do everything in Europe in the future.
So, as you said, this is not something that we would love to push as a message to our community, because we're very much, interested in keeping tech in Europe as much as we can, and also the innovation in Europe as much as we can. So, what, from your perspective and from your opinion, what do you think can we do to change the cost of failure in Europe, despite a topic that is, politically very sensitive when we talk about this? What can we do? What could we do?
Let's be clear. It's sensitive absolutely everywhere in Europe. So this is not an easy topic. And let's put that in perspective. It will take 10 years, maybe more, to fix the problem. Like the single market in 1968, or like the creation of the euro in 2002. These were projects that have been transforming for Europe and which we have succeeded to deliver, but it took a long time. And this is the same for fixing the problem that we have with the cost of failure. If you think on the midterm, we can fix it. First, as you see in the slide, there is no need to become American to be excellent in innovation. The European social model is key and must stay. The free training, free education, the free health coverage, the pension system, the unemployment benefits, all these systems which do not exist in the US and which exist everywhere in Europe should stay. They have no negative impact, only positive impact on innovation. What has to be fixed is employment protection laws, which only have created in 1975 in France and 1976 in Germany by Helmut Schmidt. And even on this topic, it's not necessary to change these laws for every employee. Of course, it would be a nightmare. It's only necessary to focus on engineers, marketers, salespeople who are paid more than 4,000 or 5,000 euros a month, which are highly educated, which are well paid and find a job easily if they lose their job, and could find better jobs if there were way more investment in tech in Europe. This would be the solution over time, but we need to convince the opinions in every European country that this is a way forward to regain our capacity to innovate. But again, we're talking about a small portion of the European population. 4,000 or 5,000 euros represent less than 10% of the European employees. And this small portion is the only one that needs to be reformed in terms of employment protection laws. So it is feasible and it is necessary. That's what we should do.
So if people now listen to us and they say, okay, this is really interesting for me and I would like to know more, or I would like to, I don't know, participate, think together with you, what can they do to help the necessary also regulatory changes in Europe? What would you recommend?
Well, I would say, first of all, they should talk about it around them. The issue of the cost of failure, that it is never discussed. It is not on the agenda. The politicians, the companies, nobody refers to it because it's considered as a given. And it should not be considered as a given. It's only 50 years old and it can be changed. So first, let's talk about it. Talk to your boss, talk to your trade union, talk to your representative in the parliaments, talk to your journalist or economist friends, and ask them to investigate this topic. So that's the first element that everybody can do. Do you confirm there's an issue? What do you think? Let's talk about it. And the second element is help us. We are a few and trying to work on this. And I've published a book, which is referenced here, Europe, Tech and War. I've published some articles in the Financial Times, in Commentaire in various countries. And we are trying to push economic institutes to analyze the data in detail. What are the reality of the restructuring costs for large companies around the world and in Europe specifically? What is the impact of these restructuring costs once we know exactly what the data is, which I know because I come from a large company, but which outside large companies, nobody knows. So if we could get the data, analyze it, and that requires money, and that requires funding. So if you could help us fund this, just contact me on the website europetechandwar.com. And we are pushing these documentation of the issue and the mindset change by economic institutes, by large companies, by politicians, by head of states and governments, so that the reforms become possible in the coming years. Let's take the time, but let's start it now.
Well, thank you, Olivier. It's really very interesting. And it's, let's say, the second time that you come and speak to our audience. And I'm sure we're going to continue the discussion. All of the links to the book and the articles we're going to put in the show notes for people to find them very easily. And they can find it also on your website. And I'm really looking forward to continuing the discussion. And thank you very much for sharing all of this with us.
Thank you so much, Andrea, for your interest and for the possibility to share all this. Thank you very much.
Thanks for listening to this episode of European Tech Talks until the end. If you enjoyed it, please leave us a 5-star rating and share it with your friends and colleagues. This will help increase our visibility on the podcast platforms. And don't forget to subscribe to receive our latest episodes. Before you go, have you considered joining the European Champions Alliance? As a member, you will have access to a network of European companies and industry experts, exclusive publications on industry-specific topics, invitations to members-only events, and support and advice on your pan-European expansion plans. If you're interested, please visit our website at european-champions.org or reach out to us on LinkedIn. See you in the next episode.